Hello, friends, partners, Facebook friends, YouTube friends. Dr. Daniel Daves here, and wanted to get together with you this evening in a brief webinar because many things are happening in the world's markets, and there are some reversals and turnarounds coming very shortly. And I wanted to make sure that you have an opportunity to see what's coming, and possibly, if you have an interest in investing and in markets, that you may have an interest in stepping in and learning how to trade these markets successfully. If you have not yet gone out to the Facebook page called Bitcoin Crypto World, make sure that you do that and sign. Just hit like on that thing, and you will begin to see the Bitcoin Crypto World posts that I put out, as well as there are 5 free webinars on the top of that page where you can learn how to trade. And these 5 different basics that I give you will keep you safe in trading. Now, what I'd like to do is run you through just a few things. But before I do, I've got to do some house cleaning. First of all, this risk disclosure, if you will please read it carefully. You have to understand that we are all adults here, and that whenever we're talking about investing, trading, there's always risk. And so before you ever risk your own money, your hard-earned cash, make sure that you have received counsel from a qualified, certified investment professional. I am not a certified professional investment advisor. So what I'm going to give you today is all educational in nature and purpose only. I am not asking you to do anything. I'm not recommending that you do anything. As you see these this risk disclosure, it's very important just for the legalities of what we are about to talk about. And if you are willing to agree to this risk disclosure, then we can proceed together in the next, let's say, 25 to 30 minutes. And I'm going to show you some awesome things. Of course, there's always risk involved. And some people handle risk differently than others. If you are not one who can handle risk in a great way, then I recommend that you back away. That's the only recommendation I would make. But every morning I have found when I get my feet and I pull them and I put them out of bed onto the floor, I begin to take risks. I'm risking that I'm going to make it through the day. I'm risking when I get in the car. I'm risking when I eat breakfast down at the so-and-so cafe. I'm taking a risk all day long, and investment risk is it's the same type of risk as any other kind of risk. So you need to understand your risk and know how to move with it. They call me the giant tracker because my bottom line is I track giants. There are giant fish in the markets. These guys can't hide. When they move, when they start buying or when they start selling, they cannot hide from me. And I've learned over 17 years how to track these guys, how to isolate them, and figure out when they start putting their cash in, something big is about to happen. Because you don't put $1 billion or $10 billion or $100 million into a market without knowing something that it's going to be moving the other way. And when a bunch of the big fish start putting their cash in, those are the fish you want to track. Those are the giants you want to track. You see this guy looking here? He's saying, check out, someone just put some big footprints in the sand, and those are the footprints that we're looking for. I'm not looking for a little guy, and you don't need to ask me what I'm investing in. I want to invest, and I want to trade alongside of the giants. So when the giants move, Daniel Daves is also moving, right? Very good. Okay, and before we jump into this thing, let me talk just for a moment. I need to do this because I am a follower of Jesus Christ. I believe in the Word of God as the final authority for my life, and I believe we're in the mode and the moment right now of apostolic revolution. And what that means is, in my my opinion is that God is breaking out of our old mentality where we thought we were, maybe you go to church and Sunday morning and Sunday night, or if you're a real good Christian, you go on Wednesday night too, right? But God has broken way outside of the church box into an apostolic revolution, well, right, what I call kingdom authority. And the kingdom of God moves 24 hours a day, 7 days a week, and the kingdom of God is an advancing takeover kingdom. Jesus said, from the days of John the Baptist till now, the kingdom of God, the kingdom of heaven has been advancing, and the violent take it by force. And that means to me that Daniel Daves, I need to get out beyond a job, and I need to start looking at multiple streams of income, and I need to start thinking about investing into these markets. Why? Because the big dogs are out there. That's where the real money's at. That's where the real authority's at, and I need to learn how these markets move. Now, there's just a couple of scriptures. One is in Revelation chapter 1, where at the end of this verse 4 through 6, it says, "And he has made us kings and priests unto God his Father. To him be glory and dominion forever and ever. Amen." Not only are we to be priests and to serve God, we are to be kings. And kings have dominion. Kings have a domain. Kings seize kingdoms. It's a different ballgame than being a priest. And so I see in the Bible over and over, especially in the book of Revelation, twice it says we're not only priests, but we are also kings. Revelation 5, 8 through 10, as you can see, "And has made us unto our God kings and priests, and we shall reign on the earth." So we're not just a passing by, sorry devil, just passing through kind of people. We are here to reign on the earth. But unless we become kings, unless we understand what a king is and how a king thinks and operates, we'll never be able to reign on the earth. But I believe in this apostolic revolution that we're in a time frame where God may be calling you, he certainly called me, into the markets to trade, to invest, to learn how the markets and monies move and how to access them and how to step into multiple streams and bring those streams into my hands so that I can do good works with them. I think God's probably calling you to that also. And with that, I'm just going to say very quickly in Genesis 2, verse 8, it begins talking about the Garden of Eden that God put man into. And in that garden, as you get down to verse 11, you see that there's 4 streams. There's 4 rivers in this garden, and the first one is the Pishon. And if you understood what that one means, in the Hebrew, it literally means my daily bread. Jesus told us to pray for our daily bread. God, give us this day our daily bread. Daily bread is your job. And so river number 1 is your job, but river number 2 is let's see here, it winds through. In verse 13, the second river is the Gihon, and that is none other than what we call the gift of God. The gift of God. And so when the gift of God comes as a stream to us, we need to tap it. We need to access it. We probably need to learn what is the gift of God and how does it come to us. When the gift of God comes, he expects us to grab it, to seize it. Absolutely. And the third river here is the Tigris. And that Tigris means a rapid flow like an arrow in motion. Imagine finance or a river flowing by you or maybe flowing to you like a rapid flow. My friends, rapid flow in my estimation is business. It's called massive cash flow. It's when something big starts happening in your life and it comes really fast. Well, if I'm just a job guy, I'm never going to own a business, but multiple streams of income require that I look at these 4 rivers. The 4 rivers are in Eden, and I am in the garden that God's put me in. He's put 4 streams there. I think he wants me to tap all of them. And then, of course, the 4th river in verse 14 is the Euphrates, and that river means sweet water that makes one glad. Now, If you've got sweet water that makes one glad, my opinion personally from studying this is I've got a job, I've got gifts that God wants to bring me, I've got business opportunities He wants to put me in the middle of, and then the fourth river is so sweet, it makes me happy, it makes me glad. I believe that's the investment world. That's where my money is making money for me rather than me working to make money. That's where things get real sweet and real good. Stream number 4. God's given us 4 streams, and that's in the Bible. So with that, I just wanted to give you some biblical foundation of where I'm coming from and why I've been trading markets for 17 years. I've learned there's a vast amount of wealth in that big pool, and I am going to go after it. I'm going to learn how to seize those funds and bring them in to the kingdom. All right. Very good. My friends, some of you out there online, if you get a chance, just hit the mute button on your phone or the mute button on your computer. We appreciate that. And then afterwards here, I may open up for just a few questions. All right. So let me see here. I'll just make sure everyone's muted. Very good. All right, let's go to the next slide and getting ready to move on forward. Let's talk about this for a moment. Why would you want to trade the markets? And there is a difference between trading and investing. Investing is kind of it can be short, medium, long-term hold, but you kind of put your money in and hope that it goes somewhere, and you come back and visit it once in a while. But trading is something that's very, very active. We move and act on trading. Day trading, we might be in the market for 1 to 10 minutes. Swing trading is more of maybe 1 to 10 days, and position trading might be 1 to 10 months or longer. Position trading. You'll see a few charts here, and I'll show you why position traders have made out like bandits in tough times when they inserted their cash in. Okay, so why, though, would I want to trade the market? And here's some reasons. Another stream of income. If you got a job, you got one stream, but what happens if that job ceases? It's good to have multiple streams. Number 2, short, medium, long-term gains. Some people learn how to trade and how to invest, and they say, hey, listen, in the next year, I need some cash for this move or for this, my car's wearing out or whatever. Maybe medium term. You say in the next 10 years, I believe I'm going to need to upgrade and get to another house. Long term, maybe retirement plans. I've got long-term goals, and I want to learn how to trade and invest for long term. Number 3, there's massive tax incentives. If you set your trading system up correctly, there's massive, massive tax incentives. Even if you lose, the tax incentives are very lucrative. But if you don't set it up right, forget it. If you lose or whatever, you win, the government's going to get a lot of it. And if you lose, they're not going to let you deduct anything. So I'll be glad to share with you how to set up correctly. But the opportunity, number 4, the opportunity to learn something you can pass on to children and family members. Now, I've been advising and training people for over a decade how to trade the markets in the way that I trade technically. And one thing that they all come back and say is that it changed my life. I never thought I would see the world the way I see it now. I've stopped listening to all the naysayers. I can see profit, and I can see where the giants are going. And then they mostly say, I've also found something now that I can hand to my kids when they're old enough, and this will go on and on for generation to generation. I am so thankful about that because, the Word of God says that a good man leaves an inheritance for his children's children. That means that Daniel Daves needs to be thinking about his grandkids, and that's something for all of us in this kingdom day that we're living in this apostolic revolution. We need to be thinking about the grandkids and how to arm them for success so they don't have to repeat the garbage we went through, right? And number 5, develop an investment program for others. Once you start becoming successful, others are going to want to know what to do. And what I teach and what I train, I ask my students, and what I'm going to ask you today, if I showed you something that's worthwhile, share it freely with others. Give it to them. Give it out. We need to arm people for success in this day. Number 6, there's a potential to trade and invest full time. Imagine, if you're just a one-stream guy or girl, you got one job or one form of of income. It could even be retirement or whatever. If that's happening and you lost that stream, and if you know how to trade or to invest for profit, it's possible during that period you may be able to swing over and take that full-time for a while until you find a replacement job or replacement for that other income. So these are some very, very important things to go through. And let's talk about tradable markets, because we're going to talk about these tonight. These markets are getting ready. Some of these markets are getting ready to make a drastic reversal. And I'm going to show you why I believe that and what we can do about it. Now, of course, stocks, bonds, options, futures, I trade all of that. I don't trade bonds much, but ETFs, I can grab what's called an ETF on just about anything that I want to trade. Those trade Monday through Friday. Forex, foreign exchange, trades Monday through Friday, 24 hours a day. Actually, that Forex starts on Sunday early afternoon. Cryptocurrencies, though, those bad boys trade 24/7, 7 days a week. And if you've been involved or if you've been interested in cryptos, this entire year has been a down year. And at the end in December 2017, I called at about 14,000. I told all my friends, don't put any more in. No more in cryptos. It's too high. It's vertical. And there's a rocket ship rule that takes place, and I'll show you in a moment. When what goes up and when the rocket runs out of steam, it always comes back down to the launch pad. So many cryptos have come all the way down, and they're just about down to their launch pad where they can begin to maybe move in rhythm and move in some kind of sanity this next time around. But that is one. Those are three different types of markets. If you're looking for a market to trade, my goodness, there's always something out here. Just grab a laptop and an internet connection or a cell phone from anywhere in the world. You can trade one of these markets at any point in your 24-hour day. All right. So with that, leverage, this is important. And I want to give you, I'm teaching you a couple things here before we break off into the charts. Leverage is important. You need to know that, because it can be good or it can be bad and ugly. And you need to understand leverage. If you're trading Forex, typically your broker is going to give you a lot of leverage. You're going to say, just jump out there and go. But you know what? You could put $10 down on something and you could lose a couple $100. You could lose more than you invested if you're using leverage wrong. Now, if you've got a system that works right, then leverage is good. It's always good to use leverage if you can. Now, options and E-mini futures offer really great leverage. As a matter of fact, I love, one of my favorite things to do is to day trade E-mini futures. And some of my best are YM, that's the Dow 30. There's an E-mini, a small mini futures contract connected to the YM, and it tracks it perfectly right along with the Dow 30. So if the Dow moves up 10 points, this thing ticks up 10 points. Well, the Dow could cost me thousands of dollars to enter, but the E-mini only cost me like maybe $100. And so there's massive leverage, and we'll talk a little bit more about that. ES is the S&P 500, NQ is the NASDAQ, and RTX would be the Russell 2000. And some of those are great markets to get in if you know what you're doing. So careful before you buy into leverage. Make sure that you know exactly what you're doing. Now, here's what happens in like an E-mini futures contract. If you take an E-mini futures contract and you buy, just say you buy one contract at this certain price and it goes up, and you make $100 profit. I've made $100 profit in 2 seconds off of one contract before. I've also had to wait 10 minutes to make that 100. And I've lost 100 in a trade. So you have to understand, though, that if you put $100 down, let's say I have a $5,000 account out on a brokerage firm. During the day trading sessions, many of them will let me trade one E-mini futures contract for either $500 in my account. So $5,000 would give me 10 E-mini futures contracts that I could trade. There's the broker that I like to use. It's kind of the Cadillac. They charge $1,250. I got to have $1,250 in the account in order to take one contract. So let's say that I take that $1,250 and I lock it in and I take a contract. And now I'm not risking the $1,250. Never, no. But if I took that and ran it up 1 point, I could make $100 on that one contract just in seconds or minutes. And if I happen to make $100 on that one contract, what happened? My $1,250 that I put in, not risking it all, and you choose what you risk. Are you willing to risk $25, $50 of it? Are you willing to risk $100 to make $100? Those are all technicals that I teach in a kind of a layer level 2. But at $1,250 in, if I made $100, I made 8% on that trade. 8%. Now, I'm here to tell you that Wall Street, the big execs, their goal in life for the year, going all the way down to New York Stock Exchange, going back and forth, doing all that they do all year. They're trying to beat the S&P, and the average S&P 500 gain per year is about 16% per year. And so these guys' goal is to make 16, 17, 18% per year, but you could conceivably make 8% in one trade on your $1,250 contract. That is the power of leverage. Powerful. And so a $15,000 account could, in my trading platform that I use would be able to run 12 contracts. 12 contracts on $100 profit. You can make $1,200 a day in seconds or minutes if you traded all 12 of those contracts as a seasoned, trained professional. You could make $1,200 a day off of your 15 grand. Now, that is the power of leverage. Of course, if you don't know what you're doing, or you're an addictive personality, you're a tradeaholic, or you're a gambler, you're probably going to lose that money really, really fast. Warning, warning. You have to be seasoned, and you have to be trained, and you have to have a system in place that you obey at all times. A system that works more than it loses. And so as you can see here, $1,200 a day, 5 days a week, conceivably could be $6,000 per week or $300,000 per year. And so the reason I'm telling you this is because we're coming into a point here with the E-mini markets where there's an opportunity for people to step in, learn how to trade them, and use the power of leverage carefully and make a whole lot more money than you've ever made before in your lifetime. All right. Okay, so here's the leveraged E-mini futures model. We already went through that. Trade the Dow E-mini futures contract. It's called the YM. And you can do it for $500 to $1,200 per contract. If you capture 20 YM points a day, that's $100 profit. What do 20 points look like? Okay. Look at this chart. This is a day's movement in the Dow. I took this quite a while ago, so we're not at the 12,000 level. But in this day, it was coming down, kind of retracing back up, and then it went down and down and down and down. And that little red box that you see is 20 points. If you could capture that move or two of those moves, two halves of those moves, that's 20 points a day. That's how little you need to be in the market in order to capture 20 YM points per day. Look at the amount of money that is transferring up, down, up, down, up, and down. Now, by the way, did you see that I showed you that the market was falling down, and I told you that you could make 20 points on that going down? Most people do not understand that we can make money with E-mini futures and with Forex and with cryptos. We can make money when the market's going down. You have to understand this because that's the power. Look how fast markets go down. They go down faster than they go up. And big money is made. Millionaires and billionaires are made when markets crash. And if you've ever wondered if a market was going to crash, well, if it does and you learn how to go down with it, you could change your life forever on just one crazy little crash. So we're going to talk about long, which means up, or short, which means down. Long or short the market. And I want to show you how this works in case you don't know. I'm going to use Walmart as an example, okay? And this is worth the entry price of your ticket into this webinar tonight, right? Okay, so you can make money when the markets go up. Everyone knows that. I bought Microsoft and then it went up and I sold it and I made money. But what happens if Microsoft was high and it came down? Can you make money going down? Absolutely. It's called shorting the market. And so long, short, buy or sell, I'm going to explain to you. Well, of course, long is buying. I want to buy it low and I want to sell it high. But when I short the market, I want to sell it high and buy it low. I'm doing the exact same thing, but I'm reversing the order. Well, how do I sell something before I own it? That's called shorting the market. It's a genius plan to keep the markets from ever going down to zero. And so buying the market is buying it low, selling it after it goes high. But shorting the market is selling it when it's high and then buying it back when it's low. Yes, this is absolutely done all day, every day. Now, let's just use Walmart as the example. Has anyone ever been down to a Walmart store or a Kmart store, or just go down to your grocery store? No matter what country you live in, I promise you this works with all of the grocery stores. So first of all, I went down and I bought a 6-pack of my favorite soda, okay? Bought a 6-pack, like this lady's doing right here. She's buying some Pepsi, and so I bought this today. Now, my question is, when did Walmart pay for that soda? So if Walmart is the market, and I went down to the market and I bought the soda at a good price from Walmart, I bought it, and I walked away with it, when did Walmart buy it? Because Walmart sold it to me today. But the answer is Walmart will not buy the soda for at least 90 days. Nowadays, grocery stores, big stores are waiting 4, 5, and 6 months to pay for the stock that's sitting in their stores today. So when I bought that soda today, Walmart took my $3, I bought it for $3, and they took that $3, they sat on it, they used it, they made interest on it, and then months later, they paid for the soda. That's the way of the markets. So here it is. Walmart receives the 6-pack of soda today, this week. I come in and I bought it for $3 today and handed Walmart my $3. And then Walmart buys the soda from the cola company 90 days, 150 days, 180 days from now. They pay for that soda that was sold months before in their store. That's the power of leverage for Walmart. They can run and rotate their money over and over again. They might sell that soda 3 or 4 times before they pay for the first one that came through. Now, in the same way, shorting the market is the same. If I am, let's say I am Walmart, and let's say you're Walmart. And let's see, I'm going to come back here. So I'm Walmart, you're Walmart, and I go to the market today and I go, wow, that market is really, really high. I don't want to buy it up there. It's too expensive. Well, if you know exactly when and your timing is right, you could sell the market before you buy it. So I could sell Microsoft. I could sell an E-mini futures contract. I could sell believing that it's up at the high. And if it comes down, I buy it back at a later time, and I get to keep the difference. So in effect, I did buy it low and I sold it high. I just didn't do it in that order. I sold it first, then bought it back. And that's the power of shorting the market. If you ever need to see it in action, it happens all day, in every industry, in every market around us, like I just said, in Walmart. And it also happens in the U.S. stock market, in international markets. It's happening in all equity markets. It's happening everywhere. All markets allow shorting of their markets. Now, cryptos will tell you they do not offer shorting, but I'm going to show you how we short the market all day long in crypto, and that also will be worth the price of your ticket today. All right. So is short selling good for the market? Some people say, now, hold on, because a billionaire company could come in at the top and they could start selling before they bought it. And if they sold enough, they could drive that market down against us, right? Why is shorting the market good for the market? Because let's say that market drops all the way down. Look at it like this one here. It just fell down. But shorting the market ensures that the market will never go to zero. Why? Because once you sold it, you have to buy it back to exit. And when you buy it back, the market begins to rise again. So when the big boys sell and drive markets down, when they buy it back to exit, they raise the market back up again. This requires some training. You need to know how to follow these giants. You need to know when they're selling and when they're buying and get in the pocket with them, ride right along with those giants, right? And so it is a good thing. Shorting the market is a good thing, especially, once the market gets too high, no one wants to buy it. People want to start selling it. And I sell the market probably almost every day that I trade. I'm taking a short somewhere. So it is very, very, very good. Okay, let's do this now. I want to take you to, I'll just show you some of our, let's look here. Here's the S&P 500. Now, this is an expanded view all the way back from 1988 to current today. And I want to show you, does anyone remember the crash of 1987? It was horrible. As a matter of fact, it was such a horrible crash that executives jumped out of the windows of skyrises. They ended their lives because the crash took everything they had. But if they would have just held on long enough, they would have recuperated more and lived happily ever after. This, right? Let's see. Here's 88. Okay. Let me go back just a hair. Let's go back. There. Can you see it? That is the crash of 1987. And while the market had been going up, and then bam, it lost all that. Look how tiny it is and in comparison to the markets ever since 1987. After 87, we went through a rhythmic ride that ended up going up to the year 2000. Remember Y2K? There it is right there. We had 13 years of market running. If you're old enough to remember this, it didn't matter what you put your money in. It made money. We were in a 13-year bull market where from 87, from 1988 all the way to the year 2000, those years, just throw it in and it magically made money. Amazing, amazing stuff. And then after Y2K, we hit a top, and finally it started coming down. And then we hit 2001. Here is 9/11, I believe. Right here was 9/11. It kind of went up again and down one more time. And right here is where I started trading, right in this zone here. I watched this double bottom hit, and then we knew, and our mentor said, if this is not the time to buy, there's never a time to buy. And we watched the market then go from 2003 to 2008, 5 years. Now here was 13 years, here was 5, and then we got the meltdown. If you remember, the big bailouts that happened, this thing was crashing hard. It was going to crash more than likely down to about 300. I could show you technically where it was headed to, and the banks were bailed out. The Federal Reserve, Congress, and then ever since then, in 2009, we are now, in 2018, we are 9 years into a rocket ship, up, pullback, and up. We just now busted new highs. Now, I'm going to train in on this here. And let's just look at the last. By the way, these candlesticks represent a weekly. This is a weekly chart. So each candlestick is 1 week. And we hit a top right up here. In January of 2018, we pulled back, and here we go. We busted up over the forever highs. And that's where we are right now. We are right now in a forever high point. We're in no man's land. This is outer space. There's no strength of the sellers. The sellers have been, if you ever saw the movie 300, where those guys ran a whole company of soldiers off a cliff, and the guys jumped off the cliff rather than face the soldiers to their death. Well, that's exactly what's happened here. Up here is the all-time forever high, and the buyers just ran the sellers, just routed them and ran them straight up into no man's land. And the buyers have won again. Well, what will happen up here? Well, we have to wait and watch. We're looking for the giants, but the giants have not said that they're finished at all. I would imagine the giants want to get to 3,000, and then they want to head to 3,500. And that is their target. If they keep breaking new highs, 3,000, nice round number. 3,500, nice round number. And you may say, that's crazy. It could never happen. But we're not going to talk tonight a lot about why this happens. The bottom line is we expand the money supply. The Federal Reserve prints trillions. It hands it over to the banks, who quietly buy the stock market, and the market goes up. And that's the way it works. So we look at it and say, wow, look at my 401k. Look at my IRA. Look at this. Wow, it's going up. Yep, it's going up all right. As a matter of fact, some people being worried about the dollar, they say, well, the dollar is going to crash. Well, if the dollar crashes, it's very possible the stock market just keeps going up. And why would that possibly be? Just 30 seconds on it. Microsoft. Let's say the S&P used to be worth $1,500 right here. And in 5 short years, it's worth $3,000. Why? Because the money supply has been expanded. There's been more purchasing into the market. There has not been any sellers. They're all buying in. And so but yet the dollar has, during that time, lost value. So basically, what used to cost $1,500 now costs $3,000, and that is inflation. So the market is showing massive amounts of inflation, and could continue to go. The S&P literally could go to 10,000 during a dollar crisis. Now, if I showed you, let's see, I think I've got a dollar. Do I have a dollar here? SPX. The dollar may be, here it is. It's over in the gold. Yeah. So here's the dollar, and I just show this real quickly. And anything can happen with the dollar. Absolutely. Anything can happen. But during 2001 and 2, the dollar fell. 08, 09, it started gaining strength. 14 through 16, bang, up to here. 16, 17, we got a little bit in 2017, the dollar started tanking down, and it broke a low, which concerned a lot of people, but then it rallied again. And it has done a couple secret things right here that say it wants to go up dramatically. How could the dollar get stronger? Well, it is fiat currency, but we're looking at charts. And we're looking at what the giants are seeing and what the giants are doing. And if this chart is correct, this is a cup and handle play. And if this dollar pops up and breaks over the top, we take the depth of the cup and we double it to the upside, and way, way up here is the target for the dollar, well over 120. Right now it's at 94. That means just holding the U.S. dollar, if this does happen, holding the dollar would give you great strength. Here is the actual cup and handle target at 130. If the dollar runs up and breaks that purple line, 130 is the cup and handle technical target for the U.S. dollar. Can you believe it? Now, you may say, but I've been hearing the dollar's losing value and it's dead and all of that. Yep. That's what the fundamentalists say. Fundamentally, the dollar's dead. But as long as it keeps going up, we can keep making money on what the technicals say. I am a technical trader. And so for me to successfully technically trade, I cannot listen to the fundamentalists. The fundamentalists believe that Bitcoin is worth $100,000. I'd like to find a fundamentalist right now to buy my Bitcoin from me for $100,000. Well, they appreciate, hey, I can pick it up for $6,000 right now, but we think it's worth $100,000. Fundamentalists always lose money because they fundamentally trade what they believe the markets should be. I trade what I see. I trade actual movements of the actual money, and that has kept me a whole lot safer than those poor little fundamentalist boys. Okay. Take a look at the ES. This is a 10-minute chart, and I just want to show you some of the trades we've taken just in the last week. Let's see. And this is day trading. Okay, so in a 3 trading day period, we were able to take 8 active trades, had 7 winners, 1 loser. You're always going to have a loser out there. Nothing's flawless, nothing's perfect. We had the capacity, whoever took all of it from beginning to end was able to take 26.5 points. We lost 2.5 for 24 ES points total. That's $50 per contract, $1,200 profit in a 3-day trading period for 1 contract. That's $1,200 profit on a $1,250 requirement in the account. All right. That is the power of E-mini futures, and these were the actual trades that you're looking at. So you can see this was a short. We started here, ran it to here. We shorted down, and let's see, what was that one? Here we go. Oh, I'm sorry. Okay, so this one here, this was a long, and we actually lost the 2.5 points. Let's grab a short. Let's see. So this one was long. This one here was short, so we shorted from 2902.50 down to 29.290. I'm sorry, 2900.5. That was good for 2 points. All right, and this was a buy, long. Here's a short back here. We shorted right here at the top, and the system that I trade typically finds the top and the bottom. It's pretty accurate, within ticks anyway. A few ticks. And so we shorted it, bang, straight down, took the profit, 2.75 points. It took, this is 10-minute chart, so it took about 40 minutes to make that trade. Some of them are faster, some of them are slower. So anyway, that's, and then today we saw the market just fell. It fell pretty hard, but we only took 1 trade on this fall, and that was a short. We shorted it for 1.5 points today. And now this market will eventually, it'll pick up and it'll end up doing something. And we wait patiently until we see what the actual buyers and sellers are doing. And once they make a setup and we know what we got, then we always enter that trade. Okay, very good. Now that's the U.S. stock market, and as I showed you in the weekly chart here, let's see, where were we? I was here, the S&P weekly. At some point, this big run up here on the S&P, those are weekly charts, and it's been happening since 2009. At some point, we're going to get a massive correction. When that correction comes, I'll go ahead and use Fibonacci right now, and this is one of our tools that we use to judge the technical numbers. If you know anything about Fibonacci, it's just phenomenal. So from this movement down here all the way to the top, right here we have a 38%, a 50%, and a 62% line. And these are the three layers where big fish typically like to hang out and buy. And so could you imagine picking up at 28.88, if it did come down, pick it up for 2,100, and then it takes off again for this big new high? Or could you imagine knowing where the zone is where the big fish are hanging out? We know the zone. Fibonacci is one of the tools. Support and resistance is another major tool. And what I use one screen, one desktop. I use a few lines, support and resistance, and then once in a while I'll pull a Fibonacci chart. I do not use all of the other stuff that to me is many voices. Most of them are successful 40% of the time, and that's not good enough to win in any type of market trading. And I don't use stochastics and RSI and all the other stuff that's out there. I don't use it. I don't need it. The markets are much simpler than that. And once you understand divine rhythm, and that one man and two men get in a room, one buys and the other one sells, rhythm begins to take place when humans get involved in trading or doing business of any kind. Rhythm takes place. Okay, I'm done now, I believe, right now for the S&P. I want to go over to cryptos because this is the important part that I want to show you tonight. I've got a watch list here of some of the top cryptos, Bitcoin all the way down here to ADA, Cardano. And if you were to take a look, let's just pull up Bitcoin here. Bitcoin has been, let's see, this is a 1 day. Okay, these are daily charts. And if you remember the big rocket ride, I think everyone enjoyed the rocket last year. Boom, all the way up to $20,000 Bitcoin. But the important thing to understand is this thing was going in rhythm, 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 and then all of a sudden it went up this way, up, 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 straight up. And when that happens, that's a hyper-fueled rocket ship ride. And when the rocket ship runs out of fuel, and they all do, all of them run out of fuel, then it comes back down to the launch pad. Where did I tell you that the rhythm stopped? You remember? Right in here. That's where it stopped. Launch pad, bang. Down, down, down. One of the classes I teach is a classic definition of an uptrend, which that's when you want to buy, is higher highs, higher lows, 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 higher highs. Where was the last low? Right here. The classic definition of a downtrend is lower lows. Uh-oh. There's your low. We hit a lower low. You could know right there, just from higher highs, lower lows, you could know we just entered a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, higher low, lower high, lower low, lower high. Are we in a downtrend? Yes. Higher low, lower high. Higher low, so we're coming into a pinch point here, but we're still breaking lower, 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 lower. The buyers have not shown up to be able to break higher highs. So we're in a classic downtrend, but we're close to the launch pad being right here. I believe we could possibly get to 5,000. 4,700 right here is the cost to mine a Bitcoin in the United States of America. Wouldn't surprise me if we bump down under that for a moment. Probably not for long. But after all of this drop, we're coming down close to the launch pad. We're getting real close, and that's important to know. Okay, so now let me do this, and I want to show you why it's important. Back in July and August, something happened with Bitcoin. Down, down, down. All of a sudden, this candle showed up, and this candle showed up. These two candles, $100 million plus poured into Bitcoin in 1 hour here and in 1 hour here. Those are daily candles, but in just 1 hour, the rocket ship took off. And then a total of 7 big $100 million type of orders came in this next move up. And what that is, my friend, that's giant tracking. The giant settled in. They settled in between 5,800 and 60 or 8,200. They settled in. 7 massive groups of buyers, big buyers, not me and you buying 1 Bitcoin or 5 Bitcoins. We're talking about boys that put in 100 million, 200 million, $300 million. And when they come in like that, they can't hide. And as we see, let me get my chicken scratches out of the way. Look at all the green. Now, when I see that, I've seen this for years. I've seen it for 17 plus years when these big boys show up. They showed up. Immediately what happens is the market tests it back down, and it scares all the retail guys because everyone gets excited right here. Oh, man, did you see that Bitcoin's up to 82.50? We're on. And then they all start buying. They buy, and then it goes boom, 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 boom. A little bit here, boom, 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 boom. And it starts scaring everyone, and they start selling. Oh, no, I'm losing again. I can't take it anymore. I got to keep enough to be able to buy, pay the bills. Oh, no. And they start buying, and the market comes down and scares them one last time. They buy, or they sell. But who are they selling to? They're selling to the giants who started this thing, but now the giants are buying everything they can down in this zone, and it's happened over and over and over again. I've seen this thing thousands of times, and when we get down in this in these lower zones, maybe 5,000, maybe a little below, so many people are going to be scared. Oh, so many little guys, the little retail guys. As a matter of fact, here, sorry about that. Okay, shoulder, head, shoulder. If this breaks, this head and shoulders breaks, and it's right at the edge right now, today, of breaking, if it breaks under, take the head and go on down, or take the shoulder and go on down. You're down in the 4,700 range. This shoulder would take us to the 47. The head could take us even deeper. So head and shoulders play down to the lower end, and what happens then? I can't say this for certain, but I've seen it happen so many times. Let's say it drops on down here. It comes on down into the 45, 47, 5,000 range. Once it hits, there is a pool of buyers down here. They're the big boys, and the big guys are waiting. They're waiting. They're like sharks. And the sellers are going to be us little guys, scared, and we're going to be selling it off just to try to hold on. What about the little guy? He bought it at $1,000, and he kept it at $20,000. I'm holding for the $100,000 or the $1 million, and now it's all the way down, and it comes down and hits $5,000, and he goes, I'm all the way back. Now all this time, all these years, I've only made $4,000. I'm just going to sell. He sells. These guys all start selling, and it pushes it down into the pit. When the pool of sharks and the big boys grab it, we could see a $2,000 or $3,000 move straight up in one day. I can't say it will happen for sure, but this is so indicative of a rocket that's lost its flame, comes back down to the launch pad, right down below, boom. Not that the boom is forever. If I got in down here and it boomed $3,000, let's say it boomed to 10 grand, baby, I'm taking it off because it's going to get challenged again. It's coming back, and then I might get back in again and run for another bull run. What is the definition of an uptrend? Higher highs. There's your last high. Well, here's one. We got to break that high. We got to break this high. Here's the next one at 10 grand. We got to break that. Well, how are they going to do it? Big, massive moves up. Higher highs and then higher lows. Wherever this low ends up, and we're getting close. I'm not saying it's on today because we're still in a classic downtrend. Wait for the uptrend move. But if you're able to see the bottom, where we will very possibly see it, I'll be able to pull that thing out possibly within hours and find a good bottom to get in on. We could see $2,000-$3,000 move up, maybe more. So if you bought it for 5 and it goes up to 8 in one day, bingo. What a great, great shot. Okay, now I want to go back to the watch list because Bitcoin is the bellwether. Let's call it the bellwether. It's the one that everything else moves. When Bitcoin goes down, everything else falls even further. When Bitcoin goes up, they all kind of take notice and they all kind of come back in. But look what's happened to things like, here's a great coin, ADA Cardano. This poor coin, this doesn't look like Bitcoin. It was as high as 40 cents. At one point. You can pick it up right now for 6.5 cents. If you know anything about Cardano, you know that this thing has a future. Wow. I mean, this could be a 100-fold coin in the future. Now, that's fundamentally talking, but it has utility. It has reason to be used. It's not just a hyper game. This thing has opportunity. So if Bitcoin drops down another 1,000, what will Cardano do? Probably go down maybe another penny. And what happens if you picked up, let's just say you were trained and you picked up Cardano, let's just say it was at the bottom at 6.5 cents, shoots up just this far to 15. You more than made 100% on your money. This is the power of leverage using cryptos. Once the moves start back up again, once the cryptos wake up and come out of their hibernation, there will be opportunities to pick up a 6-cent coin, run it to 15, get out. Pick up a 10-cent coin, run it to 20, get out. There's going to be a lot of opportunities coming, and they're coming, I believe, soon. I can't tell you when because all I can do is watch the giants. The first giants with Bitcoin showed up back in July, August. They showed up in July. And we're waiting now for this market to fall down, hit the pool of sharks, and let them drive this market to the moon. When I say the moon, I mean up maybe around 10 grand. So with that, get yourself ready. Be prepared for potential big movement in Bitcoin. And be prepared for big movements in the U.S. stock market and in the Forex market as well. Up or down. When you know how to trade, if you use leverage, use it wisely and you'll do well. If you don't use leverage, no problem. If you know how to trade, you can do well in these markets. So I got 5 free trading classes out there for you on the Bitcoin crypto world. Please get a hold of those. Go through them. And if you're interested at all in trading Bitcoin or you want to know some of my secret strategies, go out to drdanieldaves.com, hit Market Mentor, watch the videos, and read up a little bit. Down at the bottom, this is a cryptocurrency deal. If you want to do the big master trader, it's down at the bottom. Click, let's see here, master trader right here. Click here, yeah. So the master trader, I've got 2. One, and this Bitcoin, the crypto is going away probably in 30 days, but I'm offering it now. It's a 90-day package that tells you all the basics that you need to know. Otherwise, it's the mentoring program. Okay, with that, I want to open up for any questions. Now, I've got you all muted right now. I'm going to open up the mics. and or you could type into a chat in the chat session if you like. Let's see. I made it, Dr. Daniel. I have no idea what I'm seeing, but I'm going to soak into it. Okay, great, great. If you have any questions right now, if you'd like to look up a stock, you want to look at a crypto, let's take a look. I'm going to open up the vocals now. Any questions? You can shout it out vocally, or you can type it in, either one. Certainly be glad to take a look at anything that you'd like to look at. If you got a stock you like, or one that you're concerned about, or you want to talk about gold or silver or oil or any of that. You're all quiet.
Can you hear me? Can you hear me?
I hear you perfectly.
Hey, this is George Galindo from
Hi, George.
Arlington, Texas.
Hey, Texans
Hey,
here.
I made it. Yes, sir. Yes, sir. Thank you for the invite.
Sure.
Can you, this may or may not be the right question or the right timing for it. However, the Bitcoin that I got started rolling through USI Tech, that I went into what is the platform, Coinbase.
Okay.
Is that something that can be utilized to start trading?
Yes. Well, if you have an account with Coinbase, and if you have either dollars or cryptos in Coinbase, you're ready to trade. Coinbase has the Coinbase Pro allows you to trade crypto to crypto, or U.S. dollar to crypto, and back and forth. So yeah, anything that you have, if you have any value at all in Coinbase, you're ready to go. If you don't, if you have a Coinbase account but you don't have anything in it, you can throw some dollars in there and you're ready to start trading and investing in cryptos. Absolutely. And let me take that one step further. I wanted to say this tonight, and I did not. I forgot to do it. But this is very, very important. Okay. And just a moment, I'm going to shut off the mics for a second. Okay. In the crypto world, did you hear me earlier? I said you can short Bitcoin. You can short the cryptos. How do you short it? If it's going down, 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 how do you short Bitcoin? Okay. This is very important. I hope I say it right so I can allow you to wrap your mind around it. Okay, right now you're going to use a U.S. dollar that's fiat currency. All right, it's a piece of paper or it's a digit in your bank account. You can see it online. You're going to trade that over to a cryptocurrency. A crypto, it's a digital currency, and that digital currency does something. You can trade this currency. If it's a Bitcoin or if it's a Cardano or whatever, you should be able to trade them in buying for goods and services and things like that. So it's an alternate dollar. When Bitcoin is going down, what is going up? The dollar is going up. Dollar's going up. When Bitcoin's going up, the dollar's going down. These are adverse trades. They are diametrically opposed to one another. So when Bitcoin is retreating and coming down, you used to be able to buy a Bitcoin for $10,000. But then Bitcoin dropped and you could buy a Bitcoin for $6,000. Which got stronger? The dollar got stronger and Bitcoin got weaker. Okay? Now, you have to be willing to put both of these in a corral, or you put them both in the fighting ring, because it's dollars against crypto, crypto against dollars. And if you want to gain value, when the dollar's dropping, you want to be in crypto. And then when crypto's dropping, you want to be in the dollar. So at 20,000 Bitcoin, let's say you bought Bitcoin at 6, ran it up to 20, and you were one of those real lucky people, and you sold it at 20 grand. So you had one Bitcoin at $20,000. You stayed in dollars and it fell all the way down here. And let's say that you came in and you bought Bitcoin again at 12,000. But now you're able to buy more Bitcoin because you have 20,000. But you now bought Bitcoin at 12,000, so you're able to buy $20,000 worth of Bitcoin. That's what, I don't know. I'm not a mathematician. Is that 1.8, 1.6 Bitcoins? And then you rode the thing up, and you said, "Oh man, technically I need to get out of this again." And you took it off at 17. So you increased your value by another $5,000 now, and you sold it. You sold it all. And now you got 25K, and Bitcoin slides all the way down. And then you come down here. Let's say you bought it again. You bought Bitcoin again, wrote it up a little bit, and you made some more profit. You bought it up again, made a little more profit. So you technically could have taken your $20,000 and turned it maybe into $30,000. $30,000 this year, doing what? Staying out of Bitcoin, or buying Bitcoin, writing it up, and taking it off because you're in a downtrend. A downtrend does not immediately turn around and turn into an uptrend. So you're either in dollars or you're in cryptos, one or the other. To short crypto, you get into the dollar. But you know what, man, to go from Bitcoin back to dollars, there's exchange fees and all of that. You can use what's called Tether. Tether is the dollar derivative of cryptos. So I can go from the crypto Bitcoin to crypto Tether, and Tether tracks the dollar. It doesn't track cryptos. So in shorting Bitcoin, we go to Tether. When it's time to go to Bitcoin long, we get out of Tether, back to crypto or back to Bitcoin or one of the derivatives that are following it, like any of these guys, Ethereum or Bitcoin Cash or Dash, Neo, any of these guys. Does that make sense? So shorting Bitcoin is getting back into the dollar. I have been out of cryptos all of 2018, with the exception of a couple rides up that I took. I have been out, and it's been a boring, lonely year. But crypto's asleep. And we know that Bitcoin took 28 months and worked solid for 28 months, and now it's taken 8 months off. Let's say instead of a month, let's say that you went to work for me on my farm in Panama, and you worked 28 hours, not months, but hours. If I got you to work for 28 hours and you'd fall into the truck afterwards and I drive you to your house, how many hours do you need off before you can start working again? You need at least 8. You need a sleep, a rest. It's called rhythm. Everyone's heart takes a break after 2 beats. You work and play for 16 hours and take 8 off to go rest. Why wouldn't every market take time off as well? That's exactly what's been happening. Bitcoin has been resting, but Bitcoin will wake up again and go to work. I don't know that it'll go in a hyperfueled rocket ride work level, but it will go to work again after it's finished. In July, I showed you where the guys, the big boys, the big millionaires or billionaires stepped in. What happened there is Bitcoin kind of rolled over, opened its eyes, hit the alarm clock, and then said, "Oh man, I feel terrible. I better get out of bed and go make some coffee." Bitcoin is thinking about getting out of bed, making some coffee, and getting ready to go back to work again. It's not there yet, but get ready now. Now's the time really to get trained and make your decisions. What do I want to do? How do I want to trade? What do I believe in? Why do I believe in it? Ask yourself some critical questions. Okay. So now I'm going to turn this back on again. Okay. If everyone's mics are available, if you want to ask by chat or vocally, feel free. Okay, I see Scott here. GDX, gold index. Gold index. He wants to look at gold. Okay, let's go take a look at gold here for a second. Now, here's GLD. Let's go to GDX. Okay. You can see a whole bunch of stuff in here. Okay, now we're looking at GDX. This is a monthly chart, so this goes way back. This is 2007 to now. This is the slow-moving trends of gold. Gold is typically diametrically opposed to the dollar, right? So if the dollar's strong, gold goes down. If the dollar falls apart, you want to be in gold. How many of you here tonight have some gold, or you've thought about gold? Well, gold is the obverse, and I got to tell you, I could take you right now to the I could take you to the news stories everywhere, and they're saying the dollar's over. We're failed. The economy's crashing. These are the shadow signs of the crash. But the big guys right now, the big monsters of the market, they are not saying that gold has crashed or that the dollar's crashed. They are actually saying that gold is going down. And so if we were to look here from, let's say, 2016, we had a nice pop up here in 16. That was right at the beginning of the Trump presidency with the change of the guard. And then bang, 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 bang. Now gold is losing. At this time, gold is headed downwards. The GDX gold index sitting at 1833. The absolute, let's see if I can pull this back. The absolute low right now, see if I can pull that, is sitting at 1215, and it's heading down here to go test that line. Can you believe it? So fundamentally, if you know anything about fiat currency, you know gold is worth $10,000 an ounce. But fundamentally and technically are two different terms. And if you trade fundamentally, I'm afraid, I just don't believe a person can make money trading fundamentals. How many people have been buying gold and silver, been buying it all the way through the Obama era, and it was losing, going down. And then we get one little pop up, which this could be the same kind of pop up. It really could be. Just like we saw in the cryptos where the giants stepped in, but now that's coming down to be tested. So technically, we should not, I'm just going to say this, technically we should not be gold buyers until here, or here. Never buy it until here. This is what the markets have been. We've been in a downtrend ever since 2010, been in a downtrend. Some giants stepped in. They established a zone. And now that zone is going to be tested and maybe break new lows to really freak the gold bugs out and get a bunch of them to sell off to who? The predators down here. And then bam. It could happen, a great big one. A great big rocket launch could happen. It just happens over and over like that. So if you're a gold buyer, I promise you, you bought because you heard the fundamentalists telling you gold, you got to be in gold, And it is a good protection. If the dollar melted down overnight, you want to be in gold. There's a lot of reasons to be in gold right now. With Trump executive orders and the potential of putting the dollar back on gold. There's a lot of things that could happen. Gold, silver, great bet. But if you're technically trading gold, we're just now starting to come down into the zone where you should buy it. But I promise you, and I tell you, I just know so many people that bought gold, bought it all through this decade, and they've just lost. It's just the difference between fundamental and technical. And if you learn one thing here tonight, and if you can keep reminding yourself, because we live in the fundamental world our whole lives, and then a technical guy like me comes along and says, stop, go technical. It's hard to do. When you've been totally trained for fundamentals, and then you all of a sudden you're being told to go over here to technical. It takes a while. And that's when I train students, I train them for 6 months to a year because of this, because it takes that long to retrain the brain to success. Okay, so that's what we see now. Typically, probably $14.25 to $9 will be a great buy opportunity for gold, just based on what the big players did back here in 2016. So they bought in. They're expecting something in the next 2, 3, 4 years to pop up and take them into profit. That means that we would then be breaking over the top of the 31 high. Okay, let's see. Anyone else here? Does the system depend on your personal input, or will the tools you provide allow me to be independent? I missed the first half. The key for trading and investing is you've got to find a system. If you don't have one, you got to find someone that's got one and then learn it. And so that will take time. It takes time. And to learn a system, you have to believe in it. You have to see it work over and over again, and then you'll trust it. You see 100 cars go over that rickety-looking bridge, and okay, well, I could probably ride my bicycle across if the cars all made it through. I have some trust in it now. And so you have to have a system that works, that's high probability, and that you can trust. But you have to learn it. You have to learn it in your heart and in your head. And you have to have the faith to pull the trigger when it's time to buy. Because the big guys and the giants buy when it's all red. Did you ever hear Rothschild say, when they start shouting blood in the streets, that's when I buy? So the big guys that own the whole world, they buy when blood is in the streets. And crypto stories lately have been saying, Bitcoin suffered, it's a bloodbath. When you hear that, you know the big guys are starting to take a look. They love bloodbaths to get involved in. But that's hard to get involved in as a retail guy, like, why would I look? You're looking at gold right now. Why would I dare buy this down between 15 and 9? I mean, if it's down that low, why would I buy it? It's almost free. Exactly. That's why they're buying it. It's almost free. But we have to change our minds, and so you have to have a system. Once you have the system, you can back up. And here's what you can do. Here's a monthly chart. I can take a trade in gold. Within the next 6 months, more or less, I could probably take a pretty good trade in gold, and I'm going to hold it for 1 to 10 years. That doesn't take any time. Now, I had to learn the system, but now I can just invest in like that, and I'll come visit it once a year and see how my gold's doing. Wow. Or if I pull this down to a weekly chart, everything changes. Ooh, weekly. I don't want to quite get in on the weekly. It's fallen apart right now. So I might not be a buyer weekly. Or if I come down to daily, I might say, oh, hold on a second. Daily, we got a little pop back here. Daily, this is a good time to buy daily. I just broke a new low from the 17th, or the October 17th. Is that what it was? Oh, no, from December 20th, 2017, I just broke a new low. It looks like this is a great time to get in for my type of trade. But with that daily, I'm not staying in for 10 years. I'm only going to be staying in for maybe 30 days, 60 days. Or if I go down to 10 minutes, I might stay in for a day or two. Look at this, 10 minutes. Look at the 10-minute chart on gold. Look at it. It's rocking up, up, up. It's rocking. Man, we might want to get in on this move upwards. But if I'm thinking monthly, I'm still thinking down. If I'm thinking weekly, way down. If I'm thinking daily, we've gone down and maybe we're going to turn around. But 10 minutes, wow, it's going up. You see the different timelines? That's why you have to decide, do I want to trade? Do I want to day trade? If so, let's take it down to a 1-minute chart. And let's see what's going on now. Every minute, I get a new candlestick. So we see here at the beginning of today, bam. Well, actually the end of the market and tonight, this is tonight, bam, it's gone up. And if I would have traded this and ran it up and taken it off in a day trade, I would have made lots of money just on a few minutes, maybe 30 minutes in the market or less. So time frames are important. Who are you? What kind of trading do you want to do? You want to trade? Like, do you just want to take one trade a year? We'll back up to a monthly chart. We'll show you how to do it. If you want to take one trade a day, we'll back up to a 10-minute chart. You want to take one trade an hour? Let's go down to a 1-minute chart. We'll find a trade every hour. So that's how market trading moves on different, multiple timelines. Okay. Anyone else tonight? Open it back up. Mics are open. Anyone else? You've been heroes. You've been champs tonight. And I hope this has helped you to prepare yourself for a crypto move. For, as you saw there, you just kind of got an idea on the dollar. What happens if the dollar does go up? I hope you took some notes there. I am recording this. Hopefully we can get it out and you can go back. But if that dollar goes up and breaks that high, the dollar is poised to get very strong, as in maybe 40% stronger than it was today. In the coming few years, 40% stronger. What could you imagine that just holding dollars in your bank account and they get 40% stronger, more valuable? Wow. And then, of course, cryptos. They have been, some of them been smashed back to the launch pad. Bitcoin looks to me like an Elon Musk SpaceX rocket, and it's coming down nice and easy. Going to sit on the launch pad for some refueling. So we're coming into a season in the cryptos. May happen in the next month, may happen in by 2019, but just get yourself ready. Now's when you want to answer all the questions and get ready to make your move in. If you decide to trade E-mini futures on a day trading deal where you want to trade an hour in the morning or an hour in the afternoon while the market's moving, huge gains can be made if you know what you're doing. It's a super deal. Okay, any last questions? Going once. Going twice. All right, my friends, going 3 times. God bless you. I want to thank you very much for being with me tonight. And any questions, feel free to contact me, Facebook or email, however. And be glad to help any way I can. I love market trading. It's in my blood. It's a passion of mine. And I love to help people during this apostolic revolution to seize multiple streams of income. See you soon, my friends. God bless you.